Good evening, this is Ryan Mallory for SharePlanner.com. Today is November 14th, 2010. Hope you all are having a fantastic weekend. As you may recall, if you have checked the website over the weekend, I had a market wrap-up video that only lasted about 2 minutes, and it should have been about 10 minutes long, and for some reason when I uploaded it to YouTube that did not happen. So thanks for all you folks out there that let me know that the market video was incomplete and needed a little bit of fine-tuning. So this is actually my second go-around on this market wrap-up, and hopefully it is better than the last one that you guys did not see. Alright, so let's go ahead and jump into the S&P 500. A lot of action that happened this past week, lots to talk about here. Namely, the break of the 10-day moving average, which I talked about numerous times. I said it wasn't a game changer, but it was a place where we've seen a lot of buying support come into the markets when we've touched it. So we did close below it, but one thing that is very interesting to me is that each time we've closed below the moving or the 10-day moving average, we've seen a significant snapback in the markets. And usually, and that happens after we've seen a significant sell-off, remind you. For instance, here back on September 23rd, we closed down pretty low in a very similar pattern to what we saw here, except this pattern that we just saw last week was about a day longer. But you see here we had a breakout and then 3 days of significant selling, which erased all of that breakout's gains and then some. Right here we have a huge breakout and then a pullback that wipes out that breakout, and then including a little bit more in terms of losses. So very similar pattern. What we saw back on 9/24 is a huge rally after that, which was a bullish kicker type pattern, which is very good to see. Same thing again on October 4th. We have a huge sell-off after a breakout, and boom, we break out to the upside again. Have another breakout followed by another sell-off. Each of these sell-offs have closed below the 10-day moving average. This one occurred on October 19th. We get a bullish engulfing pattern the following day. So trading, you look for patterns, you look for edges. The edge here is that we're going to bounce off of this 20-day moving average. We've pretty much done as much. We haven't quite tested it as well as we did on Friday, but we have gone pretty close to it, and each time we have, we've bounced back. So my thesis going in tomorrow is it should be a rally going that we see. I'd be even disappointed if we saw consolidation tomorrow. I want to see us with some decent gains tomorrow. Futures right now overnight we're just above break even, so there's not a lot of momentum quite yet, but we do have a few reports heading into tomorrow, starting with the Empire State Manufacturing Survey, followed by retail sales, and then we have business inventories at 10 a.m. So there is a little bit of opportunity for catalyst there. The European markets, when they open later tonight, they could also provide a little bit of a catalyst. Not sure, how those markets will do, but from a technical standpoint, the market has done a very good job every time it's closed below the 10-day moving average on this current present trend to move higher the following day. One thing that some folks are a little bit worried is that we broke the trend line, but we've been breaking the trend line throughout this entire trend, if that makes any sense. First of all, we started off right here, and then we flattened a little bit here, and then flattened again. The trend line continues to flatten once again to where we're at right here now. A trend line that continues to flatten doesn't overly worry me. What does worry me is we put in a lower low. So if we break below these lows from 1027, I'll definitely start getting concerned. Tomorrow I will actually close my long positions, every which one of them, if we break and close below the 20-day moving average. That has been my thoughts going into this, and that's what I'm going to stick to. Doesn't mean that I won't get back long again, but if that happens tomorrow where we do close below the 20-day moving average, I'm going to take a step back and let this market settle down a little bit before adding any more capital to the long side. So that's the big part that I wanted to go over. The other thing that I want to show you is the Bollinger Bands, and it does use a 20-day moving average as well. You can see when we popped above the Bollinger Bands back on November 4th. We had a little bit of consolidation followed by a significant sell-off. I had talked about that, warned you guys all. When we had this big pop, I sold all my long positions for the most part, except for Netflix and TICC. But typically, I mean, if you look at this trend line, we have basically traded within the Bollinger Bands except for November 4th, and we've traded above the 20-day moving average. Very, very healthy for a trending market. So I expect nothing less than for us to bounce tomorrow. If that doesn't happen, and there's a very good chance that that could be the case, I'll sell my long positions. I'm not worried one way or the other. Yes, I'll lose a little bit of money as a result of that, but I'm all about capital preservation. So if my thesis doesn't hold up tomorrow, then I back out. One more chart I want to show you. I want to show you the 200-week moving average, and this is also something I find pretty interesting. Okay, here's the 200-week moving average. I had talked about this being a significant resistance and support level in the markets for some time now. You have it where we sold off on a retest of the 200-day moving average here, and that was right after we broke it. So we broke down below the 200-week moving average, and then retested it, and then sold off further. We rally back up to the April highs. We sell off after testing it. So what happens here? We did consolidate for a couple of weeks. We had a hard time breaking through this 200-week moving average, but once we did, and I'm pretty confident that because we did, we should still see further rallying. We broke through the 200-week moving average, and then we basically pulled back perfectly to the 200-week moving average, tested it, and held the significant support level. So further reasoning why I think that we'll probably see a bounce this week. And if not, that 200-week moving average coincides nicely with the 20-day moving average on the daily charts. So they should be a simultaneous sell signal if we do break below it and close as a result. So those are things that I want you guys to keep an eye on. Some people think I was a little bit crazy or a little bit hasty to add 4 new long positions to my portfolio on Friday, but yes, the feeling stunk, in your stomach. It doesn't feel good to always add long positions when the market's tanking. The first thought that runs through my mind, at least, is like, okay, let's back off. I don't want to put any more capital to work when the markets seem to be falling. But instead, though, when I was looking at, I have to keep my feelings separate from what the charts are telling me. And that's what I did basically on Friday, is that the charts are telling me that, hey, despite this sell-off, despite what we saw Monday through Friday this past week, there's not been really any real technical damage done to the market. There's been a recent higher high. There's been no new lower low. Yes, we closed below the 10-day moving average, but every time we've done so, we've had a significant snapback, especially after retesting the 20-day moving average. We've broken through the 200-week moving average. We held that on Friday. So I'm going through all these facts in my head, and I can't really give you a reason why the bears have all of a sudden gained control of this market, because I frankly do not think that they have. So with that being said, I added more positions to the portfolio, so I'm about 72% long. If I'm proven wrong on Monday, so be it. I'll close out of those positions and look at the markets a little bit, again, and try to come up with a new strategy going forward. But for now, the bulls still maintain control. It seemed like a pretty healthy pullback. The volume on Friday wasn't astronomical by any means. It was about average. So I feel like the bulls still have control of these markets, and I'm going to trade accordingly to that thought or that idea. So, all right, I'm probably tiring you guys out. You're probably ready for me to hang it up here, so I'm going to let you guys go for now, and we'll attack this market head on this week. Quick note though, I'll be in Las Vegas Wednesday, Thursday, and Friday. I will have my computer with me. I won't have my whole setup with me, so I will be a little bit handicapped to that degree, but I will be active. I will be on the chat room. I will be posting articles, so I want it to be as business as usual, maybe even better than business as usual, because I'll be doing some interviews out there next week with Harry Boxer, Michael Cavell, Timothy Sykes. So I think it'll be pretty good, and maybe I can get a few more interviews as well and have those posted on the site here throughout the week. So keep an eye out for that. I'll give you guys updates. Maybe it's something good for you guys to maybe think about going out to, the next year or so. This will be my first time out there, so it'll be a new experience for me as well. All right, folks, have a good evening. Enjoy the rest of the week, and get a good night's rest, and we'll be back at it tomorrow morning.